Yo, what's good, everybody? This is like my third time trying to do this intro. I haven't had my coffee this morning yet, so I'm kind of like dragging here. I was gonna turn on my face cam for this because I'm really just breaking down like psychology and psychological issues with traders. But I look like a bum right now. I haven't had a haircut in like 3 weeks. My barber's been busy with all the holidays and all that. So I'm gonna get my cut 20 seconds. So once I get my hair cut, okay, I'll turn my face cam on. I figured it all out, so we're good. We're all set. But yeah, hopefully you guys are enjoying that FX replay. I'm testing it out. I tested it out last night. There's definitely some issues with the platform. Um, I will be the one that kind of tells them what to fix since I'm now, sort of working with them, I guess. I mean, they just gave you guys a code. They gave me a free account. That's it. Um, if I sound a little weird right now, I don't know. It's like the allergies. I just went outside, walked my dog, and I came back in, and I'm feeling like ass right now. So, anyways, going back into what I was really supposed to talk about was psychology. Okay, so a lot of you a lot of you send trades all day in the group chat. I don't want you guys doing that moving forward. I don't want you guys doing that in 2023. There are a few of you that send, like five setups and up every day, and you just should not be looking at the market for that long. You shouldn't be trying to catch all those setups. You know what I mean? And you should be only trading one single session in the market. Now, I mean, if you want, you could trade, London, New York, or like New York, Asia, whatever, whatever fits your strategy, whatever you have the data to back it. As long as it's profitable, you can do it. But me personally, with my strategy, what I've seen is that I perform best in New York. I don't perform well in London, in Asia, none of that. I will always, if not always, lose, right? So when you're in the market, just literally look for like 2 hours. Look for 2, 3 hours. If you don't see setup, move on to the next day. With the problem with fundeds and the challenges that you guys are trying to pass, right? You've got a time limit and you've also got that profit target. And the second that you start your challenge or whatever, you're like, oh, fuck, like damn, like I gotta pass this, like I need to. And you're really just forcing yourself onto positions, and you're forcing yourself to chase money pretty much. So moving forward, right, look for just risk to reward. Okay, so set a goal every week, every month, every day for a RR. Now, if you don't hit that RR, if you lose, whatever, be done. If you want, you can take one more trade like I did. If I lose once, I'll look for another trade. We broke this down in the webinar, but if you guys didn't watch the webinar, I'll be breaking it down again. Now, for challenges, literally just do 0.5% to 1% per trade. That means you can lose up to roughly 10 to 20 trades or so, I believe. I'm not really good at math. I'm just good at looking at numbers and price, in the market. Besides that, I can't do math for my life. I can't work with numbers for my life. None of that. You guys need to really focus on the risk, because you can have a 30% win rate and it can still be profitable, very profitable. What am I trying to get at here? So when you pass that challenge, right, when you hit that 8 to 10%, that 5% for this phase 2, and you get live credentials for the first, I'm gonna break this down how I trade fundeds. Okay, when you get that live account, all right, trade 1/4 of a percent position, 1/4 of a percent. So that means if you lose 4 trades in a row, you only be down 1%. 1% in 4 losses. Speaking, if you do lose 4 times in a row, that is 2 days of losing 2 setups. 2 picture perfect setups that match our confluences, that match our entry models. You know, you really shouldn't be losing 4 trades in a row. Now, if you win that first trade, up the risk, up at a 0.5%, because what do we have minimum for RRs? 4. So if you trade a 4% and you make 4R at minimum, you're already up 1%. Okay, so now that gives you leverage to be able to risk 0.5%. Now, if you want, you can keep risking 4%. I don't know what I just did. I'm kind of cleaning my keyboard, but if you want, you could literally stick with a 0.25%. If you have, you know, like 300K, 200K, you're fine. You don't need to trade anything more than a 1/4%. You can, you know, if you're up 4, 5, 6%, and you want to make, you know, a nice check for that bi-weekly period, that monthly period, whatever, risk 0.5%, risk 1% if you want. You know, it's all up to you. It's all up to your strategy. But me personally, on fundeds, starting to build that account, I'll only risk 1/4%. Now, when I am up like 4 or 5%, for that first payout, I'll be done. 4 to 6%, I'll be done trading. Now, with the second payout, if I'm up 4 to 6%, then, you know, I'll up my risk to 0.5%, maybe 3/4%. And I'll really never ever be risking 1% on a live account, ever. Most you'll be seeing me risk is 3/4%, 0.75%. Okay, so when you're on your live account, once again, compound. Those so-called small wins are going to build. Okay, if you're on a $100,000 account and you're risking 1/4%, you're risking $250. You're making $1,000 that trade. If you hit 4 trades, you're up $4,000. If you lose 4 trades, you're down 1,000. You know what I mean? And in one single 4-hour trade, after those 4 losses, you're already break even at minimum. You know what I mean? So really take that into consideration. Come into fundeds not chasing money, not chasing payouts, not chasing, you know, that time limit. Setups will come to you. The more you force setups, the more you're like, oh damn, I only have 10 days left, like I need a trade. The more you're going to dig yourself into that hole, and the more accounts that you're going to need to buy, and the higher payout you're going to need to be able to clear all those losses buying all those accounts. Take it slow. Now, when you're consistent and you've got 2, 3 months, 4 months on a funded, you know, up the risk, you know, 0.5% per trade, and you will see, you know, your not only your account grow but your bank account. Now, when you are getting these profits from prop firms, you know, personal accounts, you need to reinvest it. You can't just save it. You can't spend it. You can't be like, oh, I got paid out 20K this week, 10K this week. Let me go to the mall. Let me go, you know, let me go get some clothes. Let me go, you know, let me go out to the club. I don't know, whatever you want to do, you know, like whatever you like to spend your money on, stop doing that. Save the money, you know, put it into an IRA if you want. IRAs, you know, you compound that yearly, and by the time you're 60, 70, whatever, by the time you're almost dead, you can take out all that money tax free. Personally, I don't do that. Why? Because I really don't see myself needing, you know, $1 million in 40 years when I'm 60 years old. I see myself needing that money, you know, in a year, 2 years, 3 years, 4 years, 5 years, 10 years, you know, investing that money into, you know, less long term but still long term compared to Forex, because we're in and out, right? So, you know, crypto if you want, you know, there's e-commerce stores, there's real estate, there's watches, there's so much that you can put your money into and let it sit. Now I wouldn't say watches are the best, but after a couple years, you know, you will make 5, 10K, you know, it's whatever, but the return isn't the best. The returns that are going to be the best are the high price items, which are, you know, real estate. e-com stores. If you drop $100,000, building and funding and marketing this e-com store, you could be up $1 million within a couple months. You know what I mean? It's all up to how you work. It's all up to what you want to invest in. But just take it slow. There's no need to rush trading. Like, there's no need to rush your journey. Like, it's your journey for a reason, not anyone else's. And I've already covered this in another psychology video, but it's like, I don't know, people see these people's payouts and they're like, oh, like, I need to do that. Like, I need that. You don't need it. You want it. No one needs that. That's greed. That is greed. You don't need anything. Build up, compound. Start with 10K a month, then do 20K a month, then do 30K a month, 40K a month, 50K a month, and keep hitting those goals. Then you can increase your value. Okay? If you're putting an hour into the charts a day, if that, you shouldn't be thinking you're going to make $250,000 a year. 50K a month, whatever you want to make it. You're not going to do that. You need to put in the work. You can't rush it. You need to come here onto the charts every day. You need to show up. Win or loss, you need to show up every day. And you can't quit, because once you do quit is when you lose. You've put all this time into, grinding, into sacrificing all these relationships, all your time. That time is now gone. And for you to want to just quit, for you to want to just rush it and all of that, it's nothing but bad. So I know this was all over the place. I haven't had my coffee. I can't even keep my train of thought right now, alright? Hope you guys enjoyed this. I hope I kind of made some sense. I hope you guys kind of got some knowledge out of this. I'm going to go drink coffee. I might make another video right after this. I was going to record a YouTube video, but like, I don't know. I wanted to record a psychology video for my YouTube, but I look like a bum, and I'm not trying to present myself to my audience looking like a bum. You know what I mean? It's not how I am. So that's it. I hope you guys enjoy your week. It's Monday. I'm not trading. I'm here recording videos. That's really it. This was a clean supply. I don't know if anyone took that. Fib probably lined up. Fibbed and almost lined up. Right here. They should hit TP, boys and girls. They should hit TP. So if you're in this, if you were in this, you'll be watching this in advance, so we'll already play out. Hopefully you won. Hopefully you can stop that break even, or hopefully you didn't lose. Okay, so also, right, if you are in a position and say you're in at the 50 and you got your stops a little bit above, bro, trail your stops. Like, if you're this deep in a profit and your take profits down here, you don't want to be up 50 pips and then just hit break even, right? So if you want, like, literally, you can even put it right here if you want. Put you like $100 in a profit, whatever. Put it right here. So whenever price makes a new high underneath this high, so say price does something like this, set your stops here if you're up a good amount of money. Okay, that's it. Hopefully that also made sense. I'm gonna go get ready and start my day. I'm too tired.